Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Shawn Cruz. He's the manager of trader services over at TD Ameritrade. Shawn, it's great to have you with me as always. And the Nasdaq-100 continuing to outperform as the major averages move along with this recovery.
Yeah, and it's been interesting. A lot of that outperformance was achieved early on in late March, early April was really where you saw the Nasdaq pull away from the other major indices. And so right now, year to date, we got Nasdaq in positive territory, finally up a little over 1%, and then we also have the S&P 500 and Dow still negative. The S&P down 11%, and the Dow down about 16%. But still well off of those lows. And I think the big thing is you can almost clip those major pullbacks, off of that price chart, because that was really more panic selling than it was trading at a price level based off of some sort of, fundamental valuation. There was just forced liquidations in general, panic selling, getting me out at any price that drove us down there. But it looks like after a pretty sharp rally back from those lows, things are starting to trend sideways a little bit more, but still drifting higher.
Yeah, well, it's also helpful in the index, too, that it doesn't have the significant energy exposure and certainly no financial exposure that's leading to this outperformance. Let's take a look at the VIX for a moment, because volatility is just continuing to fall at a pretty rapid rate. What does that tell you in terms of how traders are thinking if this volatility is going to continue? Are we past the worst of everything?
Yeah, I think the interesting thing to look at these charts, and I wanted to use a candle chart here, was look at the size of the candles, going into the end of last year, even the start of this year, and then look where they got in the March, April time period. The size of the candles is massive, and it just shows just the incredible range and volatility we were seeing on a day-to-day basis, and that drove historical volatility higher, and it also the VIX moved higher as well, and there is certainly the forward-looking component of the VIX, or the volatility index, where it's pricing in the expected variance or range that we can see from the market moving forward. But it's also going to be somewhat anchored to historical volatility as well, and so it makes sense as we've seen the size of these candles get smaller and smaller, meaning the intraday ranges have gone from being these massive, high single-digit swings to now finally back into these low single-digit swings. As you're seeing those candles get smaller and smaller, it's causing that historical volatility number to fall, and then it's also dragging the VIX lower. And so some traders are looking at this and saying they expect that to continue, and if it does, it should pull general volatility down. It doesn't mean we can't have sort of some intermittent bouts here and there. If you look at it earlier on this week, we had the VIX start out low 30s, move up, hit that 40 handle again, and then it's come right back down to those low 30s. So it looks like the markets are slowly trending higher, although there's a little choppiness on the way. But as these markets continue to trend higher, the range moves intraday get smaller and smaller. You should expect to see the VIX, as long as that can continue, to slowly trend lower as well.
All right, and to wrap up here, taking a look at Netflix with Disney earnings tonight, and certainly a divergence in the performance of the price, certainly over the past year to date. I guess you'll be taking a look to see what they're getting from streaming numbers and how that could potentially impact Netflix.
Yeah, it is. And it was hard to pick, a NASDAQ company I really wanted to focus on. There's so many that have earnings this week. One worth mentioning as well as Beyond Meat will also be reporting. That's something to watch. But looking at Netflix, I think it's interesting that we heard from Netflix recently, and they did, talk about incredible subscriber growth, but weren't so sure if that was just sort of robbing Peter to pay Paul, and that these were users who maybe they were expecting to come online later on this year, all came on at once earlier on in the spring. The other thing, though, to focus on here is really the competitive space that they're in, and the competition has certainly been heating up. Disney, who we also want to keep in mind owns all of Hulu after some of the acquisitions they've made, now has two of the really major streaming services out there, Disney Plus and Hulu. So it'll be interesting to see if what sort of surprise we get from Disney either good or bad, and their streaming businesses, and how that impacts Netflix stocks. So I actually expect to see some volatility out of Netflix as a result of what we hear from Disney when we start digging down into some of the update on their streaming businesses.
Yep, that's a great point. Shawn, thank you as always for joining us on Trade Talks.
Thank you.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.